Let's see if I can build a decent retirement planning tool using AI with just a handful of attempts. This isn't about asking questions to an AI. I've done videos on that in the past, and the results were less than stellar. This is about asking it in plain English to just build me a tool. You might be really impressed at what it can give you without you necessarily even needing to know how to build spreadsheets or manipulate this kind of stuff. But to get something useful, you need to know what to ask for, and then you really need to understand what it's giving you. So I'm going to show you this process and give you some ideas on what to watch out for. The goal is to make something similar to the professional financial planning software that I use. So that accounts for things like inflation and taxes, good or bad investment returns, and other things. All right, so let's get started. I'm going to ask it to create an interactive spreadsheet. I'm asking for a downloadable spreadsheet that I can use for retirement planning. I want to enter inputs like my current age, the retirement age, rate of return, the starting balance, and any additions to savings while I'm still working, and then the withdrawals from those accounts once I reach retirement. And you'll notice that I've intentionally left out inflation here. We'll just give it a little test. And then the output should be this year by year illustration that shows me how retirement is unfolding. So I hit return and it is going to think for a little bit. At this point, it tells us we've got an interactive spreadsheet, and I can click on that to download it. And it's going to explain to us what we have here. Some green input boxes. That's really handy. That tells you where you should be entering information, the green, versus everything else that's calculated for you. So let's take a look at it. All right, so here's our first attempt. You've got your green input boxes, various ages, and the year that matches. So let's see if we update this. Yes, age 55, and then it'll continue on down there. You're going to retire at 65. So let's see what's going on here. You've got your 20,000. That's just the defaults it put in. Then it automatically switches over to withdrawals here. So that's nice. Maybe you would rather have your withdrawal or contribution at the beginning of the year before the growth is applied. Just little things you could tweak here. And it's assuming a 5% rate of return. Now, one thing, let's see, what you might consider doing here, if you ever wanted to, you could throw in a market crash. So that would be easy to do. Let's just take away that year's worth of growth, and we'll say you're back to 750,000. And how does that affect things? It slows things down. But then you can go on down. Did you run out of money? It looks like it only did a handful of years here. And fortunately, it did ask, do you want to go longer to age 95? So let's say, yes, please go to age 100 and include inflation adjustments on spending. And it's okay if you have typos in there or something. It'll generally figure that out for you. So it's going to think here, and we will see what it comes up with. Great. Now we have some output. So I'm going to go ahead and take a look at that one. And it tells us what it did. It added that inflation rate and offers some suggestions. It's always offering something to do for you next. Now let's take a look, and you might find funny stuff like this is a certain format. Just if things get a little too squeezed, you can just open that up. And our inflation rate now is 2.5%. So it's not inflating our contributions, and that's okay. We can always ask it to do that. Let's take a look at the withdrawals and see what happens down there. So we want to withdraw 60,000. Unfortunately, it did not adjust that in for year one. Now it is adjusting it for inflation in subsequent years. But I think if the way most people talk about retirement, if they say, I want to withdraw 60,000 a year, but retirement's not for, in this case, again, the defaults that it spit out, that's 25 years away, then in 25 years, 60,000 won't buy you quite as much as it used to. So we would ask it to fix that as well. I'm now going to request that it does the inflation adjustment so we don't just take out 60,000. That won't get us what we want. But here's the biggie. I'm going to see if it can account for taxes and just, throw it in there. First attempt here, say, figure out the actual tax rate or what I might actually owe. Figuring out going through the tax brackets, assuming in this case a single filer using the standard deduction. You could say married filing jointly or whatever else you want to say. So let's see what happens. it is going to once again explain what it has been doing, and it shows us some of these tax brackets. Now, it is looking at the 2024 federal income tax brackets. Again, that's often an issue with, I guess that's behind my head, isn't it? That is often an issue with AI, is that the knowledge base might be a little bit out of date. You could certainly get that corrected. You could deal with that. But a heads up, if you're doing this, you want to watch closely and always double or triple check. Fortunately, it was kind of nice what it's offering to do here. It's saying, do you want me to just throw in what I know as the 2024 brackets? Or do you want me to make a little input section where you can just edit this year by year? So that's really kind of nice. So I'm going to say yes, tax block, and hit return. And then hopefully it's going to give us the actual downloadable spreadsheet here shortly. Okay, we've got the tax block. And before I forget, I also wanted to inflation adjust the contributions slash withdrawals even before retirement. But I'm not going to hit return yet. Just wanted to get that in there. We might not even look at that in the video. It told us that it made some changes. It's got the taxes in there. So this is going to be really interesting. Let's see what it did with the taxes. And I actually changed my mind. I want to ask it something here before I go and look at the spreadsheet myself. I can say, some people don't understand how tax rates actually work. They think that if you are at 60,000 of income, for example, and single, that all of your money would be taxed at 12%. So I went ahead and asked it just for clarification, did you do that, which is not the right way to do it, or did you move through the rates progressively? And here is what it is telling us. It did set it up, it says, through the progressive tax system. So that's good. That's basically just a trick to save yourself a little time and to understand what is the logic behind all of this. All right, we have all of the exact same default assumptions here, but you can see that it is now going to give us this tax block here. So every year, as those rates and those numbers change, you could go ahead and update that along with the standard deduction. Again, you would want to double and triple check this, and you could go to something like Tax Foundation to see how it matches up. If I copy and paste, let's see how this is going to look. You can see again, there's the 10% tax rate on singles. That's to 11,600. Looks good. 47,150. Great. 191. Okay, good. They did, sort of add this, I don't know, a giant number down here. So that's a little funny. But overall, it looks decent. And again, this is for 2024, so it's out of date. You need to either ask it to update or give it the numbers. It did the basic standard deduction. Did not ask if you're over age 65. That's all right. Okay, so let's take a look at what exactly is going on down in those cash flows. A couple of things going on here. I might do one last prompt so this video doesn't go on forever, but I didn't ask it to adjust the withdrawals just yet, or maybe it did and it only did year one. Misunderstood that, and it doesn't look like it has applied any taxes due. So I would go right back over and say it looks like it's not calculating or subtracting taxes. Again, some typos are okay. And please adjust the year one withdrawal amount for inflation starting from today. That's probably the way to put that. All right, so let's see how that goes, if it'll actually do the taxes for us or not. And it's going to explain to me why exactly that happened with the taxes, and it suggests a little fix, and it says, well, maybe I can just make a taxable income column. That would help. And of course, when you're doing this with AI, you might want it to just do that for you. So it was mostly intelligent, and it did eventually get there. That's great. So it's asking, how do you want me to do it? I say, go ahead and keep it hidden. That's perfectly fine. And it's going to come out with our next version. And sometimes it keeps asking. So I'm just going to say, yes, just keep doing that. I didn't even read the question. Yeah, you could change that later. Hopefully your tax filing status won't change every other week. Now we've got our updates. It says that it is going to account for that inflation correctly, and then some tax stuff. And then this is kind of neat. Where is that? Yeah, you got a toggle there for age 65. That's fantastic. Very important for retirement planning. I don't know if it actually will look at the ages in those cash flows and figure that out. You could ask it, or you could ask it to do that. And then great idea asking about these Roth versus traditional or taxable brokerage account type buckets. That's pretty cool. These are all things you could do. Now, I would mention that the more complicated you make this, the more likely it is to have some mistakes. We haven't even really fact checked it. I mean, I would want to really look at the cash flows and just check year by year or every 5 or 10 years or something. Does this match with exactly how I would build a spreadsheet and use the calculation? Because you can't be 100% certain that this is correct. And that's the time to enter this caveat that this is not a replacement for robust retirement planning tools, maybe with a professional or maybe with Bolden. That's a fantastic product as well. They've done a lot of testing on that, a lot of eyeballs go on that. If you do something like this, it's kind of just you and the AI, and it's easy for these things to go off the rails. And if it made a bad assumption somewhere in the beginning, you might continue to build this super complicated monster that is just wrong. So you have to be very careful. And of course, I think another good way to do it, and I'm biased, of course, is to work with a professional financial planner who looks at this stuff every day. So again, it's not just you and the AI. Now, let's take a look at that updated retirement planner. And it's just one example of how all of that complicated stuff happens. I did take the amount it's going to show that you owe in taxes. We'll get to that in a second. But it inflation adjusted the withdrawal, so that was great, up to 111,000 or so. And it's got the standard deduction. This is 2025 on Dinkytown, but close enough for very, very, very rough guesstimates here. The tax being about 16,000 due, and that's pretty close to what the spreadsheet put out. But the interesting thing is that 111,000, remember, that's $60,000 of withdrawals in today's dollars. So we inflated that ahead to age 65 to keep the same purchasing power. You would need it to be 111,000. But it's still using today's tax brackets. So it's not inflating the income amounts that you would have down here along with the income needed for the withdrawal. So you could do that. You could ask it to do that, but this is an example of how this can get pretty complicated. And then if the tax rules were to change, you have to go in and make all of these other updates. So I think if you're going to do something like that, it's decent for some quick back of the napkin math, but I wouldn't use it for any sort of detailed or robust planning and, go and give your 2 weeks notice tomorrow. I think you really want to be a lot more careful. Maybe someday we'll get there. But anyway, let's look at the last output. All right, all the same default assumptions here. It did add a box for the filing status, so that's great. Once we come down here to when you're in retirement, I had copied that number over for Dinkytown. That happens around age 65 because that's what you said. It did calculate about 16,000. And as we looked at, it was reasonably accurate if you assume that the income levels that are associated with each tax bracket don't change. And of course, they will change. Go ahead and give it a try, but don't rely on it too much, or at least be sure to triple check with either professional software, maybe a professional, but it might give you some ideas and open your eyes on some things. If you thought that was interesting, please leave a thumbs up, and I look forward to talking with you soon.